Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, June 4th, 2012. Let's take a look at market forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer for any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. And with that thought in mind, let's take a look at some of the economic announcements that took place as we looked at the preceding week. Monday, of course, was completely quiet as the markets were closed, so no information took place there. Tuesday, which was an amazing day in the market, had very little effect from economic announcements as consumer confidence didn't do much to shape the market whatsoever. As we looked at Wednesdays, we got bad news concerning pending home sales as they disappointed and were going in the wrong direction. 5.5% drop in pending home sales during April. We looked at Thursday, which was loaded with information. We got the ADP employment report, which of course gave us an insight into what the monthly employment situation would be that we got on Friday. GDP was a bit of a disappointment. Job claims were a bit of a disappointment as we showed that jobs were, there was much more unemployment claims in the previous week, so not a good week whatsoever. Add on top of that European debacles going on, and it certainly was a week that provided disappointing moves in the market because of economic announcements, which we looked at last week and saw that we expected a great deal of things that could be coming at us. So what happened was we ended up with a broad market that closed below the 200-day moving average. In fact, let's take a look at that. And we'll look at the SPX and we'll see that we had closed for the lowest levels that we've seen since the end of 2011. We'll take a look at that just as soon as we look at what's coming in this coming week, the current week, to find out what kind of economic announcements we have. Nothing of any consequence on Monday. On Tuesday, we do have ISM non-manufacturing, and we'll see whether that disappoints as the manufacturing index did last week. On Wednesday, not a whole lot happening on Wednesday. Thursday morning, of course, we're going to have jobless claims, which there will be some focus on Thursday, June 7th. And on Friday, international trade nor wholesale trade are neither going to move the market all that far. So a bit of weakness this week as we have a few economic announcements to move on in the market. And what is going to move the market up as we head into this summertime? Well, let's take a look and see technically where we're at. As I said, we closed below that 200-day moving average for the first time since the end of 2011, and we see that we did hit a support level, which was still on our charts from before at 1278.04, and we do have room to go lower with quite a debacle day as we look at the size of that candlestick, which took place on Friday. In fact, let's take a closer look at the week that was, and when we do, we'll see that on Monday, we were closed. On Tuesday, they come out and they were ready to buy. Things were looking good. Everything was looking great. And we started getting disappointing numbers. Wednesday gave back everything that we gained on Tuesday. Some indecision on Thursday, but boy, and then when Friday hit, and we did get confirmation of those employment numbers and everything else, and the market just took a dive with a huge candlestick to the downside, which certainly gave us a low for the year. And with that in mind, let's take a look next at what the individual indexes did. As we see, the Dow followed, closed below the 200-day moving average, as we're giving back that which we gained during that first quarter. And let's take a look, which was certainly a strong quarter. Next, we'll take a look at the NASDAQ. NASDAQ a little stronger as it seemed to hold very close to the 200-day moving average. And then, of course, we'll take a look at the small cap stock, the Russell, and we see that the Russell certainly led its way down as it's well below that 200-day moving average. Might watch the Russell for a hint of a turnaround. Many times it will lead. We have seen some weakness in the Russell, as it had been below that 200-day moving average earlier. And we got a lower low on Friday than we did on this previous one, which was about 10 days ago. So with that in mind, we saw that the major indexes, of course, followed the S&P, and we see that everything basically is trading below the 200-day moving average. An interesting dilemma for us is, when is this going to turn around? Is it going to turn around? When are we going to see that relief rally, which we started to see last week and, of course, fizzled rather quickly? Looking at the year so far, we see that for the week, everything was down for the week, whether you talk about the Dow, the NASDAQ, the S&P, or the Russell 2000. And look at these year-to-date numbers. Dow is now down for the year after that great first quarter. NASDAQ still up. Remember, that was the stronger one, above the 200-day moving average, up still 5.5%. S&P didn't go that far below the 200-day moving average, up 1.6%, and trying to hold on like somebody holding on as they're falling off a cliff. And the Russell down 0.5%. So everything that was gained during that big first quarter is now, for the most part, been given back. And we are in that summertime area when we're going to find out what our trading range is going to be for the summer. Are we going into a bear market, or are we going to bounce here and determine our summer trading range? Still haven't seen that. The VIX, man, that thing peaked for the day as it reached its highest level for quite some time. That certainly did move up as we saw the highest level of the VIX so far this year. All right, and with that, let's take a look at the bonds. And we saw, oh, look at that. New high for the bonds, and it just keeps right on chugging. As that market pulls back, that flight to safety continues. No big surprise there. Financials are showing the same kind of weakness as the overall market. Remember, these were the big gainers. The financials had the largest percentage of gainers of most of our sectors during the first quarter. And you see, we are now sitting below that 200-day moving average. Not exactly a pretty picture for the financials, who, of course, have been devastated with this great recession. Now let's take a look at oil, and we see that oil, in spite of the fact that things were going up, oil continued that downward trek. Interesting, and as you see, the gas prices are finally going down. Gold, for that flight to safety, we saw major interest in gold as we went into Friday with that flight to safety, and it ended up with a high of $16.24 per ounce before it closed with a 3.6% gain for the day. So quite a move out of gold, as there was that flight to safety that took place in that big pullback. And that pullback, the worst part, didn't even feel like capitulation. You may have wanted to throw up, but we didn't see a capitulation move. And we'll see where we go this morning, as the market futures are down a slight amount this morning. And the question is, are we going lower, or are we going to get that bounce? What kind of volume did we have on the sell-off? Well, we certainly had a greater volume as we looked at Friday's numbers. And you see that that 200-day moving average on the SPY, or the SPDR, the Exchange Traded Fund, is sitting right at that 200-day moving average. And we certainly could have a reversal signal with our candlestick here, but that's not confirmed until we get a higher high. So will it find support here, spend a little time at this price before we start moving up? That'll be the week that's going to come this week, and that's exactly what we're going to have to find in order to determine where this summer range is going to go this summer, or whether or not we're going to enter another bear market as we see the problems coming from Europe. Will the Fed step in and do another easing? All those things will take place during the next couple of weeks as we watch the market pull back after that first quarter gain. So we are seeing most of what was given taken away. Stocks to watch, well, those of you that are gold members, we're going to take a look at these stocks and see which ones are showing greater relative strength to the overall market. For those of you that are not gold members, you can go to www.optionsuniversity.com/free gold to see other videos that Options University offers. So with that, For those of you that are gold, I'll be back in a minute. The rest, thank you for being here. This is Butch Shorak, Options University, Monday, June 4th, 2012. Thanks again for being here.